Namaste everyone. I'm PRERNA, founder of PRERNA Spreading Inspiration, a platform where bring conversations that make people think, grow, and lead better. My mission is to create conversations that don't just motivate people, but transform the way they think, lead, grow, and through this platform, I also aim to give inspiring individuals a space to share their journey, their work, and their wisdom with the world. So, over the years, I had the privilege of hosting 55 plus podcasts with national and international speakers where we discussed leadership, growth, mindset, business, and life experiences. And today, we are going to talk about something very interesting and rarely discussed openly, the reality of the boardroom. So let me start with a simple question. Have you ever wondered what really happens inside a boardroom? So today's conversation explores a topic that many professionals are curious about, but very few truly experience the reality of the boardroom. So, from the outside, the boardroom often appears to be a place where decisions are made purely based on data, reports, and structured presentations. However, those who have worked closely with leadership teams and boards know that the dynamics are often much more nuanced. So information flows through several layers before it reaches to the directors. Context, interpretation, operational pressures, and human judgment influence how issues are presented and understood. So the idea behind boardroom intelligence is to move beyond dashboards and formal presentations and examine how boards truly understand what is happening inside an organization. So, what signals should directors watch for? And where do information gaps arise? How do governance move from procedural oversight to strategic insight? So, I'll not waste much time. So, today we are exploring these questions from both a CXO perspective and a board governance perspective. So let's begin this powerful conversation on boardroom intelligence, what CXOs don't tell their directors. So before we begin this discussion, let me introduce our esteemed guest.
Hi.
A very warm welcome, sir.
Thank you. Thank you very much, Prerna. And
Yes, sir.
uh, we wish you the success for this. Yes, I am so much happy to be with you here in this platform. Yes.
Thank you so much, sir. And audience, before starting this discussion, I would like to say with vast experience working closely with leadership teams, CXOs and boards, he has seen organizations not just from the operational level, but from the decision making level, where every decision carries risk, responsibilities, and long term impact. He brings a rare combination of technology expertise and governance understanding, which gives him a unique perspective on how boardrooms actually function behind the scenes. So today, he is here to help us understand what truly happens inside the boardroom. So, friends, I hope you would be very much excited. So, it's my absolute pleasure, sir, to welcome our guest for today's session. And our today's episode is very much demanding. So thank you for joining in, sir.
Yeah. So, first of all, I must thank you, the audience who had given they made enthusiasm and made a poll. What we made a poll in the social media, and most of the people have uh, chosen this topic, which I think they are very much eager to listen to that. So, without wasting much time, yeah, we can start our session. Yes.
Sure, sir. So, from your experience working closely with leadership teams and boards, how different is the reality of boardroom conversations compared to what professional outside the boardroom imagine?
Yeah. See, from the outside, it seems very well organized, and all the boardroom meetings are happening based on the data-driven environments and so much of dashboards and with proven data analysis and data numbers. But actually, the data is important, but the most important thing is how the board is interpreting that data and make the decision perfect. So because the interpretation may vary according to the based on the experience of the people who is doing the interpretation and their contacts and even the individual perspectives, because some same data may be three different people will conceive three different scope of out of it. So so many decisions are not what is shaped on what is presented. The
Yes.
decision is based on how they understood and the questions made upon those data, and even something not questioned also. So it is all based on the individual's experience and their perspective.
Correct, sir. And that's really such a
So
powerful perspective, I can say, sir. Yes.
yeah. So
Please continue.
yeah. So see, if and even I can talk about something about boardroom intelligence, we can say about it. So where boardroom intelligence goes beyond the reporting, what is reported there in the ring, it is all about connecting the dots. And what are the numbers there in these dashboard or reports? So they need to connect here and there and come to a conclusion, which is will be very suitable, and based on that they will make the decision. Okay, so and also they have to they ask people should ask correct and right questions, and understanding the business context and what is the gaps between. So based on this, the decision will be taken in the boardrooms.
Yes, rightly said, sir.
Yes.
And I can say that's such a powerful perspective, and it would really reshapes how we see boardroom dynamics. So,
Yes.
going to the next question, I would like to understand that the we'll go to the deeper level. So, when we talk about the boardroom intelligence, what does it actually mean beyond financial reports, dashboards, and formal presentations?
See, in simple terms, you can say the information tells you about what is happening, and intelligence helps you to understand why it is happening and what could happen next. So these are the three different directions where the intelligence comes out of the data are presented there.
Yes, yes. Correctly, sir, because I can say that it's going beyond the numbers into true
Yes,
understanding.
yes,
Yes.
yes.
So once we understand the intelligence, so the next important piece is how information actually flows. So I would like to ask, sir, that both rely heavily on CXOs reports and management dashboards. So in your experience, where do the biggest information gaps typically occur?
Yeah. See, basically, the information gaps arise between layers between the operations and the board level. So these are the two different layers, and these information gaps arise in between that. So basically, the data gets aggregated, filtered, and then sometimes they present in a clear narrative to the management. Okay, but basically, under the basic level, the process maybe because in the process operational complexities are there, risks are there, and early warning signals are there, which may not be get attention they deserve, which are which are required at the board level. Okay, so that will be the information gaps which arises. So if you ask me, then I can give you one real life story of it. So what happens in the many organization, the board presentations are full of green indicators. Okay, most of the time, 99% it will be a full green indicators. They say production targets met, costs are under control, and delivery schedules are on track. Okay. However, the dashboards are having some high operational stress below that, which might not be get noticed by the board. For example, a plant may have achieved the target of the production target. Okay, but what is the cost behind it? There may be a overtime. They may paid much overtime. They were delayed some maintenance schedules and building some inventories for that. So and based on that, they achieved the target. Target is achieved, but behind these all the stories which cost the entire company, the financial cost, the inventory carrying cost, all those things. So the board must not see only the performance metrics. They should not go to give attention and importance to the performance metrics, and they should ask questions and all how you achieve this, at what cost and what thing. So this is the real life story which I experienced in two different companies. I can't name it those companies, but these are the real time experience which I wanted to share it here. So
Yes, yes. So that's really insightful, sir. And I can say that gaps often exist in interpretation, but not just
yes,
information.
yes,
So yes. So and that brings us to a very honest and practical aspect of leadership communication, I can say. So
yes.
so I would like to ask another question, that are there operational realities that tend to get softened, filtered, or delayed before they reach to the boardroom? And if it's yes, so why does that happen, sir?
Yes, in the reality and practically, if you see in all organizations, this happens because it is not always intentional because of the pressures that CXOs having the pressure to conduct operations. They want to pay the stability, and they want to avoid escalations, and other thing they want to manage the perceptions. So most of the things it is not intentional, but they are compelled, or somehow they have to been asked to do that or something like that. Okay, so management, what happened? They have to wait for clarity before sharing the issues. Okay, but sometimes what happens? The delay may cost some risk also. So the transparency has to be there between the board and the CXOs. The board should also always not, they should not take it as a compliant this thing, and even something had bad thing or also happen, it will come only when board has ability to talk to them openly and freely. Then this won't happen at all, but most of the time it happens.
Yes, yes. Correctly said, sir. And I think that this is something many professionals would strongly relate to.
Yeah.
So,
Yes,
so even with the systems and structures in place, and gaps still exist, right?
yes,
Yes.
this
So,
exists.
correct. And
You
another
can't
question.
avoid that. Yes, yes, yeah,
Yes, sorry, sir.
no problem.
Yeah, please continue, sir.
So you can't avoid this. See, it's a manufacturing company or any other company. There are so many day-to-day practical problems are there. That the CXO has to give attention to that, and there even all the SOPs are there, and everything is there. Everything is perfect. So 100% perfection cannot be achieved, which we need to know that. So yeah, that's the reason
Correct.
behind this. Yes.
Yes, yes, rightly said, sir. And I would also like to understand that even in well-governed organizations, communication gap still occurs between the board and the management. So, what are the underlying reasons for this?
See, basically, the in even you will say well managed, well organized companies like Tata, sorry, whatever number company you name, I just given named given name the
Yes,
Tata because they're very well standard for so many years. There may be also some gaps may exist because what happens because of the hierarchies and the performance pressure and the escalating and the communication culture. Okay, these are the three different reasons. Maybe because of that it happens. One mainly because communication culture also plays an important role in that. Okay, so in so many organizations, it might not be there. In Tata, what I understand from what I learned from my networking, their communication culture is very open, and even you can go right away. You can go and walk to the chairman's director board, managing director room, and you can talk to him. So that much is there. That's what I learn from my networking. So, which is very, very, very rare in maybe other companies. You have to take appointment or something like that.
yes, yes. Correct, sir. Because I can say that transparency in the communication is much more important, and which I
Yes,
think that it will reduce the communication gaps. And
yes,
alignment is such a, continuous journey.
yes, truly.
So,
Yes.
yes. So let's now shift perspective and step into the shoes of the CXOs. So, what kind of pressures do CXOs operate under that board members may not fully appreciate from the outside?
Yeah. See, CXOs are the one person who is operating under multiple pressures, even simultaneously. Okay. Basically, they have to their accountability. They are accountable for the board, responsible for the operational and execution team, and also they need to maintain the team's confidence. Okay, this was a very 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 critical one, and balancing all this act is like walking on a tight rope. Okay, so and you have to they are expected to balance all these circumstances, and they have to manage uncertainty, and managing uncertainty is not an easy job. Okay, and it often influences the how information is communicated upward. So, see, these are a lot of these pressures are very 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 practical. We need to understand and accept.
Yes, yes, correct. And that also really highlights the human side of the leadership, because they have to manage everything and they have to take care of every person. So, and
Yes.
those pressures in the mind, let's understand how decisions are truly made. So, sir, in reality, how are boardroom decisions shaped? Are they purely data driven, or do experience, intuition, and human dynamics also play a very important role, sir? Your insights, please.
Yeah. See, boardroom decisions are not purely data driven. Even as I earlier told you, it's all based on the how you approach and how you taking perspective approach, and how you are taking the connecting the dots. Okay, all those things. Well, but data provides the foundation. Okay, and
Yes.
experience, intuition, and judgment, all these are plays a significant role. Okay, so often what happens, the most important decisions are taken when data is incomplete. So this may look or something different dialogue. See, where every all data are complete, the decision is not may not come correct. So when some data are incomplete, they are compelled to ask questions, why, what happens, and all those things. So that will come out with a different perspective of taking a decision. That will help them basically. Okay, and that is where the leadership's maturity comes in. Okay. So, for example, if I say one small example, when I go on to a small company, when I go on to physical audit, inventory auditing, the raw material they use are high cost, highly cost. 1 kg may be costing around 10,000 rupees or something. So when this one I'm talking about 30 35 years, there is no much for computerized, so very on the starting place. So when we go on there, they book the maintain the book, which are very up to say the grams, it is all perfect. In books are very perfect, but when you take a physical inventory, also then it matches. So totally there is no deviation. So it cannot be possible in a manufacturing company. So that leads to some why how it is matched. Then we understand that something they take the physical inventory first, then they match the records. So that's where it may be. So that is where this decision making is particularly you have to need to consider the practical difficulties also. Okay, so the management should not say that why you had done that. Okay, that's the main thing. Hello, your voice is not there.
Yes, sir. Yes, sir. So
Yeah, yeah,
that's really powerful. Now I'm audible, I hope, sir.
yes, yes.
Yes. So I can say that decisions are rarely just about the numbers. And sometimes even the right data, something still gets missed. So I would like to understand that have you seen any situations where the board receives technically accurate information but still misses the deeper business risk? So what causes that disconnect, sir?
See, this happens more often what we think. Okay. So information presented to the boards may be technically accurate, but without full context. Okay, without full context, the real risk may not be visible also by seeing those reports and data. For example, strong members sometimes hide underlying stress in operations or financial structures. So this also happens. For one example, I can share it with you. The numbers present to the board may be technically accurate but incomplete in the context. For example, many companies report a strong quarterly revenue growth. Okay, so as per the target they achieve, and they present with the complete this is the revenue growth we achieved. But there are certain things are there under the achieving that revenue. Maybe they may be given them heavy discounting, or they may be given extended credit cycles. Based on because of that, they achieve the revenue growth. Okay, so when the board sees the growth is perfect, we achieved the growth. So that is not the correct answer. So they have what is the underlying bigger? There are financial cost to, below that to achieve that revenue growth. So they need to ask questions, and they need to take other data of what is your cost, what is your how you achieved this. So what is the road SOP you follow? Then they come to know, okay, this is a heavy discounting or something they achieved it. Yes,
Yes. So I can say, sir, that's very strong insight because accuracy doesn't always means clarity. And
yes.
now let's bring in the modern context of the digital transformation. Nowadays, AI
Yes.
and digital transformation is going on. So, with digital transformation and AI reshaping industries, do boards today fully understand technology risk and opportunities?
See, boards today, they are increasingly aware of the digital transformation, but the depth of understanding still varies. Okay. it's okay. Technology, what happens is often an enabler. So technology is seen as an enabler, but associated with risk also. Okay,
Yes.
so like cyber security, data integrity, and data management, and are not always fully appreciated. So this I can come give you a real life example here. So what will happens is in many organizations, including some I have closely observed that there is a belief that implementing ERP or a digital system will automatically transform the business. But in reality, I have seen that where the systems were went live successfully, but business outcomes didn't improve significantly. And they says if you implement this, there will be a reduction in manpower, a reduction, and you will get the ROI in so much money, so many months or years. But that doesn't happens. Okay, why? The reason was very simple. The processes didn't change, people didn't adopt, and the leadership alignment was missing. So these are the basic reasons, and that is when it becomes clear. Technology enables, but transformation is always driven by people and discipline. So one classic example I had given is that I have implemented SAP in a textile company, and when the management chairman was used to sit with the implementation partners and functional consultants and department heads over the night to go through the each line of the SRS, what is the system requirement specification, and he will understand and this. So that way we successfully implemented, and ROI is also seen. So that's a very rare cases where the higher management sits overnight and do all these stuffs. So
Yes, sir. And specifically from a technology leadership lens, so I would like to ask you that from your CIO level experience, what
yes.
technology related signals or warning signs do directors often overlook?
Yeah. See, from my experience, what I say is boards often underestimate areas like data quality, user adoption, and change management. Basically, what happens normally the higher level management always set the objective and goals for the implementation, but the implementation teams also they closely work with the higher management and middle management, and they will design the system, but actually they will not go to the practical ground level people who are using the system. And that's some what happened, there will be a system will not get implemented properly. So my case, whatever, I always go to the ground level people, sit with them, this understand their what is their requirement, why they how they are doing all those things. So then sometimes what happens, the management will have free hands to such a people who are leading the project in the organization. So that's the main thing. Yes.
Yes. And I can say that these signals can be game changers if they are identified early.
Yes. Very true.
So,
Very true.
yes. So let's now talk about something deeper, that courage and transparency in leadership. So, from a CXO perspective, what makes it difficult to bring uncomfortable truths to the boardroom early?
Yeah. See, what is the challenge is not about just sharing the bad news, or it is about timing and perceptions. Okay.
Yes.
So CXO, what happened? They may worry about how the board will react, or whether the issue is fully understood by the board, or and all that. So these are the main worries they comes to their mind before they escalating something to the board. So the hesitations comes from sometimes delay the critical information. So that's why I always recommend, or I can say, the board must have a very transparent communication culture, and their adoption to whatever bad news or whatever happens, they have to understand why it happens and take corrective actions. So if that is there, then CSO always bring everything to the board.
Yes, yes. So that's really honest and very real answer, I can say.
Yeah.
And more importantly, how can this gap be addressed? So, what can boards do to create an environment where executives feel comfortable sharing bad news early rather than late?
Yes. So this is again. It's the boards. Board have to encourage openness, and by creating the culture, communication culture, and the behaviors towards the employees, and it should be very transparently. They have to approach whatever. They issues comes and brought out by the CXOs or any other employees. So they should not do the blame game or something like that. They have to encourage the openness to bring the issues, so that everybody can, as a team, they can brainstorm and take the preventive action and should not happen again. So when the executives feel that they are very much safe, and they are not going to be get criticized, or they'll be, otherwise on the other hand they'll get appreciated by bringing this reality in front of the board. Okay, and that increases the communication gap between the board and CXOs, which is very much essential for the organization to grow.
Yes, very true, sir. Because if the management is not transparent or friendly, so the people will not highlight the things or the bad news. And I can say that this is like a psychology safety truly defines strong governance.
Yes, yes. So it's like a parenting. How you going to nurture your child, okay, to become
Yes,
them, to make them stronger and they become independent. So the same applies here also. That's what my opinion.
correct, correct, sir. So I think that there is a difference between information and intelligence. So what should directors look for truly understand what is happening inside the organization?
Can you come again, please?
So there is a difference between information and intelligence. So
Yes,
what should
yes,
directors look?
yeah.
What should
See,
directors look for? Yes.
correct. So the information is nothing but structured data, and it gives reports, numbers, and dashboards and whatnot. Okay, but intelligence is the ability to interpret the data. Okay, and
Yes.
understand the patterns and anticipate what is the future risk is there involved in that. Okay, this is what we call as intelligence, and the shift from reporting to insight is what defined as effective governance. So
Yes.
in this case also, I need to give a small real life story. So what happens? Many boards across the different organizations, they approve large ERP, digital information investments, assuming technology will automatically improve the efficiency. But
Yes.
in reality, the success of these initiatives depends more on change management, process discipline, and leadership alignment, and the organizational culture. Okay, so technology alone cannot bring any transformation, or any, will not bring any sales or growth. It's a enabler, and as people who are involved in that, they need to understand and they need to cooperate and and properly implement the solution. Then it will give fruitful results. Yes.
Yes, that was really wonderful real life example, and I think that's the future leaders who are watching us or who will watch the recording, they would definitely get more insights. So I would like to ask that for professional aspiring to CXO roles, so what should they
Yes.
understand about the board expectations early in their careers?
See, what I aspiring CXOs should understand that boards look for clarity, accountability, and strategic alignment. Okay,
Yes.
they don't want people to say yes to everything what their board says. Okay, and it's not just about managing operations, but about communicating effectively and thinking from a governance perspective, and think this is their own business. So how, if they are managing their, if it is their own business, how if how it will bring profit or whatnot, by which way if they put all these operations then. So this is the thing CXO should know about it. For example, one company where they're taking, merging with another company. There was an chief information officer. I was there in presenting the company to be merged, the balance sheet and all those things. He are seeing those two lines in the balance sheet. He put up a very, very, very important and critical questions. This figure is not correct. Okay,
Oh,
so that much that much knowledge he has, even though he is information technology guy. Okay, so
yes.
that's the way we need to do that. Yes,
Great. So that's really valuable guidance, I can say, for the future leaders. And I would like to that for those who aspire to sit on the boards, like for
yes.
aspiring independent directors, how can they develop the ability to read between the lines in the boardroom discussions?
Yes, that's what I given just an example how the CIO put an question, right question in the right time. So all these
Yes.
independent directors who are there or who are going to be aspiring independent directors, they need to uh, increase the increase the skill to listen to the listen carefully and ask the right questions at the right time. It's not simply that I need to ask a question or something like that. The question should be asked at the right time in the right manner and with the right numbers and right, you know, uh, rational behind it. Okay, so reading between the lines comes from the experience and how recognizing the pattern and understanding the organizational behavior. So, for example, if we take my case, I'm not a regular, software testing tester, or I'm not doing any testing as a regular thing. But when I go and sit with the tester, so within 3 seconds, I can tell you this point you are not tested. So that shows my experience how the software has to be tested and what way or not, something like that.
Yes, correctly said. And with the experience, we can find out many things. And that's a critical skill for impactful governance.
Yes.
And finally, sir, let's close with the one of the most important takeaways. So, what are the early warning signals that a board should never ignore, even if the management presentations appears positive? So, what are your insights about this?
Some early warning signals include consistently positive reporting, okay,
Yes.
without variance. That's what I give an example of how the physical inventory books and the physical inventory are getting matched. Okay, so without variance, if any consistently reports are coming in, that is a early warning that you need to go in deep and understand that. Second thing is delayed escalation of issues. Okay, and third one is high employee turnover and the mismatches between the revenue and the cash flow. Okay,
Yes.
so these are the indicators often point to deeper structural or operational changes. So which what I perceived from my experience.
Yes, and that's really powerful note to reflect on, sir. It was really wonderful and insightful session with you. And I can say that as we came to the end of today's insightful conversation, and one thing becomes very clear that boardrooms are not just about reports, they are about insights.
Yes.
And at the end, so what message would you like to give to our audience or who will watch our recordings?
So basically, I can give one or two lines without taking much time. So boardroom intelligence is not only about reading reports; it's about understanding context, incentives, culture, and sometimes even what is not being said. Correct. The most effective directors look beyond dashboards and presentations. Okay, they ask deeper questions. They listen for subtle signals within the organization, and most importantly, they create an environment where management feels safe to surface problems very early. Okay, and
Yes,
when that level of trust and insights exists, governance moves beyond compliance and becomes true strategic stewardship. This is what I learned so far through from my career or from my courses and whatnot. Yes.
thank you so much, sir. And it was really wonderful and insightful session with you. And for the CXOs, it's about the courage of communicate reality. And I can say that for directors, it's about the wisdom to see beyond the presentations, because true governance is not just oversight, it's a clarity, it's a foresight, and it's responsibility. So thank you so much, Vaidyanathan sir, and for such a wonderful, valuable insights and experiences which you have shared today with real life examples. And I'm sure our audience has gained a lot, completely a new perspective on boardroom leadership and governance. It was truly pleasure having you, sir, with us today. And thank you so much for joining us. And Prerna, you have joined the Prerna Spreading Inspiration podcast. And friends, if this conversation added value to you, do share your key takeaways in the comments and don't forget to follow for more such meaningful and powerful conversations. And until next time, keep learning, keep growing, and keep inspiring. Thank you so much.
Thank you, Prerna. Thank you for this great opportunity to reach out larger audience, and I hope this might be helpful for them. And once again, thanks. Thank you very much.
Yes, it was really wonderful, sir. Thank you so much.
Thank you. Thank you.